stock market is not simply a collection of numbers on a screen, nor is it a domain reserved for elite investors alone. At its core, it is a life-changing system, one that connects businesses, capital, and human ambition across continents and cultures. Since the inception of modern financial markets, millions of individuals have participated in this dynamic exchange of value, some seeking to preserve capital, others to grow it. Markets create opportunities where none existed before. They offer a structured arena where patience and discipline are rewarded over impulsive action. History is filled with examples of investors who, by holding steady through storms, have seen their participation compound into meaningful life outcomes. Yet the stock market does not promise success. It rewards those who balance risk and reward, who understand that volatility is part of the journey, and who approach investing with both emotional intelligence and analytical rigor. For many, especially those beginning their financial journeys, the stock market symbolizes possibility. It reflects the broader human pursuit of growth, economic growth, personal growth, generational impact. Even when prices fluctuate or decline, the collective movement through time tends to favor resilience over retreat. This profound characteristic, that disciplined participation may, over time, yield positive outcomes, is what keeps millions engaged in markets year after year. In the chapters ahead, we will explore narratives from the less charted corridors of the market, penny stocks, where share prices sit below 1. This is an area where risk and opportunity coalesce in sharp relief, where stories of innovation, uncertainty, and aspiration take center stage. Today's economic world is a tapestry of diverse industries, each contributing to how capital flows, how economies grow, and how innovation unfolds. From healthcare to clean energy, financial technology to biotechnology, these sectors shape cities, influence consumer choices, and impact global growth trajectories. In major financial hubs like New York, Boston, Chicago, and San Francisco, companies operate within complex ecosystems, drawing investment, talent, and regulatory oversight. Even smaller firms, those not yet household names, participate in this vast economic web. Their operations often span multiple cities, countries, and customer segments as they strive to find market niches. One of the most dynamic and often misunderstood corners of today, S-markets, resides in low-priced stocks, those trading under $1 per share. While mainstream investing conversations often focus on large-cap names with multi-billion-dollar valuations, the subprime wallet universe reflects a different kind of financial narrative. It's where early-stage ventures, turnaround stories, and speculative opportunities intersect. Companies in this price range typically belong to sectors where innovation and disruption are common themes. These might include cutting-edge biotechnology, emerging clean energy technologies, or novel financial platforms seeking to redefine traditional services. The operations of such firms, while smaller in scale than their larger counterparts, can have meaningful impacts on niche markets and, over time, on broader economic developments. In every city where these companies have a presence, whether through research labs, service offices, or strategic partnerships, there is a story unfolding. These are stories not just of business models, but of people trying to bring ideas to life in the marketplace, with all the associated challenges and opportunities. Our first subject is a company operating within the biopharmaceutical space. At its core, this business seeks to develop targeted therapies addressing rare and complex medical conditions. Unlike large pharmaceutical firms with broad product portfolios, this company focuses its efforts on niche clinical research and specialized treatments. Revenue generation, at least historically, has been tied to funding milestones, licensing collaborations, and strategic partnerships that support its research efforts. Financial strength in this context means balancing research expenditure with capital availability, managing clinical trial timelines, and ensuring that development milestones are met efficiently. Investors have shown interest not necessarily because of predictable earnings, but because of potential breakthroughs that could occur as research progresses. Recent price trends in this stock have shown notable volatility as clinical updates and broader market movements influence sentiment. Our second subject belongs to the emerging therapeutic sector, where companies explore unconventional approaches to neurological and mental health treatment. Instead of traditional drug development pathways, this business invests in novel compounds and innovative delivery mechanisms. Its revenue model, like many in early development stages, is highly tied to research outcomes, licensing deals, and potential future commercialization. Market confidence in this type of enterprise can be measured by how its share price reacts to news, scientific data releases, and regulatory developments. In recent quarters, trading patterns have reflected heightened interest around potential therapeutic candidates, even as broader market conditions exerted downward pressure on lower-priced equities. The third company we will examine sits at the intersection of clean energy and vehicle grid integration. Operating in a global arena where electrification and sustainability are increasingly central themes, this business builds technology solutions that link electric vehicles with power grids to enhance energy efficiency and support renewable energy adoption. Revenues are generated through technology deployment agreements, partnerships with fleet operators, and licensing arrangements. In this sector, investor interest has grown in anticipation of larger market adoption of electrification technologies. However, the path to profitability often involves heavy investment in research, infrastructure partnerships, and scaling challenges that impact near-term financial metrics. Recent performance trends in this stock have shown that while long-term prospects may intrigue some market participants, short-term price momentum can be erratic. Across all three unnamed companies, market confidence and investor interest have been shaped by sector-specific dynamics, as well as general risk sentiment that influences sub-$20 share prices. These narratives of innovation, volatility, and adaptation are the backbone of the penny stock domain. Now, with context established, we formally introduce the three companies that have been the focus of our narrative. These are real stocks, trading under $1 per share, living examples of how markets reflect valuation, sentiment, and evolving business prospects. Ayala Pharmaceuticals, Inc., ticker ALA, trading around $0.63 per share. This biopharmaceutical firm targets rare and aggressive cancer types, seeking to develop therapies where few solutions exist. Cybin Inc., ticker CYBN, trading near $0.48 per share. Cybin operates in the therapeutic development space, focusing on novel treatments for mental health disorders using proprietary compounds. Nuva Holding Corp., ticker NVVE, trading around $0.63 per share. Nuvi specializes in vehicle-to-grid V2G technology that aims to integrate electric vehicles with power grids to improve energy efficiency and sustainability. Each of these names occupies a unique position within its respective sector. Yet they share a common characteristic: a share price that sits below $1, reflecting market perceptions of risk balanced against future potential. These prices are not static. They fluctuate based on trading activity, news flow, and broader market conditions. But they offer a snapshot of how these companies are valued by the public markets today. Investors observe these names for varied reasons. Some focus on potential industry disruptions, others on possible turnaround catalysts, while still others monitor technical trading patterns that could signal short-term opportunity. What unites these narratives is a recognition that stocks under $1 can be volatile, speculative, and subject to swift price movements as markets digest information. Ayala Pharmaceuticals. Founded with a mission to address rare and difficult-to-treat cancers, Ayala Pharmaceuticals has charted a path through the complex biotech landscape. Milestones include advancing clinical trials, securing regulatory feedback, and forming strategic partnerships that provide funding and development support. Challenges are inherent in the biotech sector: lengthy trial processes, uncertain regulatory outcomes, and high research costs. These factors contribute to share price volatility, especially for companies that are not yet generating consistent revenue. A competitive advantage for Ayala lies in its focus on underserved therapeutic areas, niches where patients have limited options and where successful treatments can have disproportionate impact. Risks include trial failures, funding constraints, and broader market sentiment that often penalizes biotech firms during periods of industry downturn. Cybin Inc. Cybin journey is emblematic of the emerging class of therapeutic developers exploring new frontiers in mental health treatment. By combining proprietary compounds with cutting-edge research frameworks and regulatory pathways, it seeks to carve a differentiated position in an area of expanding scientific interest. The company's growth trajectory has included advancing treatment candidates through early-phase research, engaging with regulatory agencies, and building a scientific foundation aimed at long-term clinical validation. Yet research outcomes are inherently uncertain, and investor expectations must account for variability in timelines and regulatory responses. Competitive advantages include its scientific approach and early positioning in an emerging therapeutic category. Challenges include securing continuous funding, demonstrating efficacy, and navigating complex regulatory landscapes. Nuv Holding Corp. Nuv's focus on vehicle-to-grid V2G technology situates it within the broader clean energy transition narrative. As electric vehicles proliferate and grids seek flexibility, technologies that enable two-way energy flow between vehicles and infrastructure are gaining attention. The company's growth narrative includes technology development, pilot deployments, partnerships with fleet operators, and advocacy for supportive regulatory frameworks. However, scaling such technology requires overcoming infrastructure barriers, securing adoption agreements, and managing operational costs. Competitive advantages stem from early market entry, technological differentiation, and alignment with clean energy trends. Risks include slower than expected adoption, capital intensity, and broader macroeconomic conditions that influence infrastructure investment. Across all three companies, a balanced perspective recognizes that short-term price performance may not fully capture long-term potential, but neither does it guarantee it. These companies reflect the multifaceted challenges and possibilities inherent in the low-priced stock domain. Looking toward the future, what lies ahead for these three companies and the markets they operate within? In biopharmaceutical sectors like the one in which Ayala participates, the pace of scientific progress and regulatory evolution will continue to shape outcomes. Breakthroughs in rare disease treatment could unlock value, while cautious clinical results might temper expectations. For innovative therapeutic developers like Cybin, industry trends suggest a growing interest in alternative approaches to mental health. Should regulatory frameworks evolve favorably and clinical evidence strengthen, these developments may translate into broader recognition over time. In the clean energy and electrification space where Nuva operates, electrification trends are expected to continue expanding. Vehicle-to-grid integration is increasingly discussed among energy planners and utility operators, though wide-scale adoption hinges on infrastructure readiness, cost economics, and supportive policy frameworks. Each company exists in an ecosystem of technological innovation, macroeconomic pressures, and shifting investor sentiment. Growth potential remains, but with that potential comes the reality of uncertainty, volatility, and long timelines that characterize many sectors of the modern market. The stories of Ayala Pharmaceuticals, Cybin Inc., and Nuva Holding demonstrate the diversity of enterprise and valuation that exists beneath the surface of mainstream markets. Penny stocks, those trading below $1 per share, are not simply statistical curiosities. They are reflections of market perceptions, evolving industries, and entrepreneurial ambition. As we wrap this narrative, there are key takeaways for anyone engaging with markets. Knowledge and research are essential. Understanding a company's business model, sector dynamics, and financial fundamentals lays the groundwork for informed participation. Risk and reward are two sides of the same coin. In markets, volatility is not an aberration. It is a defining characteristic, especially for low-priced equities where liquidity can be thin and sentiment can shift rapidly. Long-term thinking, clarity of purpose, and a calm assessment of facts matter more than hype or impulse. The market's journey is shaped by cycles, news, innovation, and human behavior, all interacting in ways that defy simple prediction. Markets involve risk. Understanding that reality, rather than chasing short-term excitement, is the first step toward navigating the financial system with purpose and perspective. In the end, the stock market remains more than a mechanism for price discovery. It is a mirror of human aspiration, where ideas compete for capital and where disciplined inquiry stands at the heart of meaningful participation.